Hey, what's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome back to my three stocks on sale series for the last month of the year, December 2024, where in each episode I pick three new stocks that I feel look attractive at today's prices for the long term. And to make it a little more fun and interesting, I specifically choose one lower risk, one medium risk, and one higher risk option for some added variety. Now, for this month's episode, though, because it is the last month of the year, I'm actually going to do a little bit of a special episode and only choose three stocks that were huge high flyers during the pandemic, but have now crashed into the ground where I think they might have significant rebound potential. So it's going to be a lot of fun, very interesting to look at this. Now, as always, though, just please do your own research and make your own decisions. But let's go ahead and jump straight into this because I can't wait to share this list with you. And we'll start first with the lowest risk option, and then we'll slowly add some risk to the other options as we go through the list here. So starting with stock number one, this is the lowest risk one. I'm going with Medtronic, ticker symbol MDT, who initially saw a giant spike during the pandemic before losing all of those gains soon after, falling by close to 40% from the top, and is even much lower today than where they were trading even before the pandemic ever happened too, down over a quarter of its value. So why did all of this happen? Well, Medtronic is literally the largest supplier of medical devices in the entire world. So right at the start of the pandemic, everyone was assuming that their business would perform really well with more hospitalizations and more like equipment and services being needed. However, the complete opposite happened. In fact, tons of hospitals actually went bankrupt because everyone was staying home and avoiding them as much as possible, especially for any elective procedures that they just kind of put on hold until a later date. The result being that hospitals were actually closed down, and anyone that did need medical advice was mostly just using telehealth instead. And that really sent Medtronic's demand, I would say, but also, of course, their growth and their margins falling, hence why the stock crashed by so much too. However, this is no longer the environment that we're living in right now. Hospitals are now back up and running, and even people that delayed surgeries and operations are now in large part getting all of those procedures done again. Yet Medtronic stock is still trading even lower today than before the pandemic even happened, like I showed you earlier, which tells me that this is one heck of an overcorrection here by Wall Street for what is still, in my opinion, an excellent value dividend stock. Because you look at some of these numbers here, forward PE is around 20% cheaper now than the sector, while the dividend yields over 3% on almost 5 decades of consecutive growth. That's almost dividend king status. And, we usually pay a premium for those type of stocks. And while their sales actually took a hit, a couple of times during 2020 and 2023, all other years have actually been their typical mid-single digit growth rates, which is expected to continue in all future years as well, according to analyst estimates. And while EPS profits have been more volatile, those two are now recovering back up to record highs in the coming year. By 2027, for example, well, they'll be generating about $10 billion more in revenue per year compared to before the pandemic, with nearly double the EPS, profits, earnings per share as well. And yet, based on today's prices, that PE would only be about 13. Guys, that's 35% cheaper than the sector. And by the way, it's not like their business will be in decline. They have plenty of growth catalysts on the horizon to help them get there too. First of all, interest rates are falling now. That's expected to continue, and that's going to make it less expensive for hospitals and companies really to finance Medtronic's devices, thus raising their demand. While the company itself also continues to innovate, usually getting over 100 new product approvals per year. And I think like last year was, I think it was like 120. The year before that was over 200. So they've been innovating at a high rate for a long time, and they're even expanding into surgical robotics too, which I think will play a huge role in the future of healthcare, with their Hugo robot system likely receiving expecting FDA approval by next year, according to industry analysts. So there's actually a lot to like about this stock right here, and I continue to be a buyer myself while it trades for this low. All right, now moving on to stock number 2, we'll increase the risk a bit here up to medium status for this one. And this time, I'm actually going to go with kind of a sleeper play in AI that nobody ever really talks about. I never hear them talking about it, but coming off the pandemic, it's been getting crushed into the ground. And so now I myself am actually very tempted to start buying into this stock myself too. And that stock is DocuSign, ticker symbol DOCU, which despite the stock not getting much attention, the company actually is the world leader in electronic signature software. It's very popular, has a whopping 67% market share. Nobody even comes close to that. You might have even used them yourself, either signing documents on, some digital pad, or maybe just, online through the internet, through the computer, which you can see why they would be, so popular during the pandemic, right? With so many people staying home and getting most of their work and paperwork and all that type of stuff, digitally online, including signing and filing documents and all that same sort of stuff, which, yeah, obviously after the pandemic, a lot of that has returned to in person. However, remote work, especially in more kind of redundant office and legal and paperwork type of jobs, well, that will still be easily on the rise long term, which bodes very well for a company like DocuSign. In fact, according to Statista, the percentage of employees that work from home all or most of the time worldwide has only gone up by huge amounts, with even last year, past the pandemic, still sitting at a whopping 28%. That's up from just 10% before the pandemic. That's a huge increase, guys. And look, the numbers by industry are even more impressive. Tech is at 67% remote. Agencies and consulting is at 50%. Finance and insurance is at 48%. Guys, those are absolutely industries that would actually use the types of products and services that DocuSign, exactly the ones that DocuSign offers, which, by the way, over that time, they've also grown and expanded themselves too to offer more adjacent services, including HR, legal, and more. Basically, it's at the point here where if you're either a new business or maybe you're already an existing one, but you're trying to transition more digitally and improve your efficiencies as a company, well, you can easily hire DocuSign to come in and transform so much of that work for you. The biggest of which, the most exciting new product that they offer is their AI-powered intelligent agreement platform, call it IAM, that does all the hard work for you of reviewing and managing all these complex contracts all in one place, which, by the way, is also secured by their blockchain technologies too. They're a big play on blockchain. A lot of people don't know this, but DocuSign actually uses blockchain to heavily secure their contracts and even their signer identities and all that kind of stuff too. So they're a play for that as well. Now, granted, IAM, the platform, it's still in the early stages of really rolling out, but management thinks that it will help them recover a lot of their growth rates over the longer term, which have been dwindling down to the single digits ever since the pandemic highs. And also, given the rise in competition, which is where all the risk really comes in for me, is because of a lot of new companies trying to, I would say, like duplicate what DocuSign does so well. But if you think that their branding power is strong enough, if you think their moat is large enough to fend off the competition, then this stock continues to get just more attractive, I would say, the more that it falls. Because, at one point here, the stock was even trading north of $300 during the pandemic. But since then, it's crashed by a whopping 75%, down to just the $70 range today. And with all of those pandemic gains wiped away, so too has the valuation fallen to an adjusted PE ratio that is 80% lower than their 5-year average, and a gap PE ratio that is over 40% cheaper than the sector, despite this being really the market leader. Now, like I said, I don't own them quite yet myself, but it's probably at the very top of my watch list right now in terms of future stocks that I don't own yet, but that, I would like to buy soon. And I probably will pick up a little bit of this one here in the coming month, but only as a long-term. I got to have a long-term horizon with this one, but I do like it here. All right, now finishing up here with stock number 3, this will be the highest risk of the bunch. And for this one, it's actually kind of crazy that I'm even categorizing it as high risk, but you'll understand why. I'm going with Pfizer, ticker symbol PFE. Now, why do I consider the absolute largest pharmaceutical company in the world to be high risk when we know how much of a profitable cash generating machine, the pharmaceuticals market can be? Well, the reason is because regardless of how strong of a position I think Pfizer is in as a company right now, in terms of dominance and what they're doing around the world, the stock just continues to crash regardless of that. Even this past month, the entire market has been like soaring this past month. Pfizer was down another 10%. Now, my guess is that it has a lot to do with, Kennedy. He's going to be appointed to run the Department of Health and Human Services. And I don't know how much you guys know about Kennedy, and obviously I don't want to get political or any of that kind of stuff, but the thing is that a lot of people feel like Kennedy might be disruptive to the current healthcare system, the way it's run right now. But as disruptive as he might be, personally, I don't really think that he's going to go in there and just completely dismantle these biotechs or Pfizer, nor has he even really said that that's exactly what he wants to do. My opinion is that he really is just advocating here for common sense things that I feel both liberals and conservatives can agree on, like taking unnecessary and unhealthy ingredients out of people's foods and even medicines, most of which, by the way, a lot of them are actually already banned in many other countries. So why not just have more transparency and healthier natural alternatives to, a lot of the junk that we as humans, let's be honest about it, we put a lot of junk into our bodies. So why not just be a little more conscious about that? And that doesn't mean going in and just destroying all these companies. It just means that these companies are going to have to consider people's health a little bit more than what, how they currently do, which I don't see any problem with myself. That's just my personal opinion. But by the way, there's so many checks and balances with the way the government is set up that even if he did want to dismantle some of these giant corporations, and maybe you're worried about that, I highly doubt that he would even be able to, which, your opinion, whether that's good or bad, I'm just saying, that's just kind of the reality that we live in. And yet, when you look at Pfizer's stock, it continues to crash as if they're headed for bankruptcy, even trading now at a decade low after losing more than half of its entire value from the top. That's a huge crash. That really tells me that it's probably oversold here, because really, regardless of how any of us feel about this company, politically or socially or anything else, when you just look at the numbers from an investment perspective alone, putting that, those other feelings aside for a second, even after losing all of its growth that they were getting from the V shot during the pandemic, well, Pfizer is still expected to generate over $20 billion more in revenue this year than they even did before the pandemic ever started. And they're also doing more in EPS too. And while growth is very stagnant now, as you would expect because of the loss of the V shot, well, I think that growth will likely return over the longer term thanks to the $70 billion of profit that they generated almost entirely from the V shot. And then they spent all of that money on acquiring multiple different large biotech companies to build up their massive pipeline even larger. It already has over 100 different drugs and treatments coming in the future. And at the very least, I think it'll just help them maintain their already massive size, their large profits, while they continue to pay a huge dividend at a dirt cheap valuation with a forward P ratio around 50% cheaper than the sector, and a dividend yield of almost 6.5%, with also an affordable payout ratio of less than 65%. By the way, that yield is also more than 300% higher than the sector. That's how much the stock has fallen. And it's also one of the highest that we've ever seen from them. So I just think that you couple the dividend with the cheap valuation and the future growth from the massive acquisitions that they were basically just kind of gifted by the government, because let's be honest, like taxpayer money funded the V shot. And yet the stock price continues to crash. And I just think that, as a high risk option, if we categorize it as that, I think it's got to be one of the most attractive out there in the market as a high risk stock, right? So anyway, that's my thoughts on it. But hey, what do you all think about these stocks that I chose for this month? Do you like any of them? Do you disagree with anything I said? I would love to hear your thoughts. I welcome all opinions, guys. Hey, we're all family. We're all friends. I love you guys, and I'd love to hear your thoughts. So let me know down below. I hope you enjoyed the video. I hope you're all doing well, my friends, and I will catch you in the next one. All right, take care, everybody. Bye-bye.